also gonna quickly explain you guys the strat that I use for my daily intraday plays on SPY. Very easy to follow. So for me to look for any kind of entry model within my PSS model is I always wait for price to form either swing highs or swing lows on any time frame. Could be 1 minute, 5 minute, 15 hour, it does not matter. It works on every single time frame. So, but you need to get the basic idea is that in order to get an entry in any stock, upside or downside, you want to wait for price to sweep above this prior swing highs that it made and then close below it and then wait for a trend change, which is a structure breakpoint on a smaller time frame, let's say 1 minute or 5 minute time frame. And then once that confirms, the liquidity sweep's already confirmed. Once this entry model confirmed that there's SBP on a smaller time frame, at that point, I'm only gonna look for lower highs to sell, and I'm targeting this internal range liquidities that price formed as it was going to the upside. So this is my TP1, TP2, and prices keep making lower lows and lower highs. So that's my entry model for the most of my S&P plays that I gave you guys on options, especially the first 30 minutes of open. Right. So let's look at some of the examples from this week here. So let's look at this one where I caught this massive 1500% move all the way to the downside and held it to using just one simple model that I explained to you right now. Price gapped up, this massive gap up. We have this from 662 all the way up to 674. So at this level, we had this prior swing highs where price went higher and we had this massive dump to the downside of this level. So that is clearly my external range liquidities here, which means as long as price is below this level or sweeping it, that means there are high chances of this dump coming on this gap up. And another good thing was on this day that we had this massive gap, and we look at this profile on that particular day is empty, very low volume. That means if we snipe the top, we can target this low of the day and some of the gap fill as our target only if we get filled near the highs, because that is where our very low risk to reward trade is going to be. Now let's go back into the 1 minute time frame to see how I got my entry in here. Right. First, and these levels were marked on 1 minute. Remember, guys, what I told you guys earlier is I always wait for first 5, 10, 15, 20 minutes after market open to form some sort of a mini trend up or mini trend down. And then I wait for a sweep of that level and then come back higher, or I wait for a quick move higher, a sweep that level, and then go to the downside. So this is what I look for in most of my setups, and this is what exactly SPY did on this day. Pumped higher, and we got this nice rejection. We got this rejection. I was 100% sure they're not going to dump it because the first move is always the fake one. Let's say if they break the low of the day, then I would have looked for more short setups, not a reversal setups, but a continuation setup then. But I was looking for a reversal setup, pulled back here, swept the internal range liquidity on 1 minute time frame and started pumping higher. When price closed above this level, right here, confirming that change in trend on 1 minute to bullish, I was pretty sure that they're gonna pump it back to this new high of the day if they want to dump it, or they're gonna take out this 675, 65 level here, which is equal highs. And that's what exactly they did. High of the day sweep we got right here and instantly dumped to the downside. As I saw this rejection, sweep, and a pullback, and another candle closing below. So that was a clean move. I had this lower lows, lower highs. Right in this candle, I gave an entry to my team. Then now times to go to the downside. I think with a target of low of the day, which was 672, and price absolutely dumped. Zero drawdown trade, down 2 points in just 3 minutes with the risk of only 80 cents on a trade. Like that's a 7 point risk on ES, and you already have 14 points in just a couple minutes. Price broke low of the day, stayed there, and at that level, I was like, okay, it wants to go down. I can enter more here. on my futures account. SPY broke low of the day below the magnets of 5 and 8. So bearish trend. I was short here and then held this trade again with all the members with the gap fill. I was kept telling them this gap fill is coming, and the next level that I'm watching is 667. Boom, it broke down too, and now we have this next level, which is clearly a gap fill. Once it filled the gap, this is where I tried, I think, some of the longs somewhere around here. We also caught, I think, a 40% move on this move higher too, right? And then a one call somewhere around here, but quick scalps in this downtrend too, as I was holding my short runners. Kept dumping, kept dumping. The only reason I did not sell in this whole move because there was no real confirmation on a 5 minute time frame or even 2 minute time frame that price is making lower lows and lower highs. I would have sold if, let's say, price is making lower lows and lower highs. If price broke above this lower highs, I would have stopped out of my runners and then sell it. Kept holding my position, and in the end, it went 1500% where I closed most of my position. That was external range liquidity sweep, my PSS model on 1 minute time frame. And there was another, I think I did live trading on Wednesday. Yes, exact same setup on Wednesday. I was trading live with my team, and look what happened. I was patient, not get into any trades. I think I took a loss before. Yes, I think I took a loss on calls somewhere around here. Right here, we had this internal range sweep on overnight, and then a nice trend formed. I got longs on this sweep here. Very tight stops on my longs. Which was 30 or 40 cents. I quickly got hit by stops, I think minus 20 or 25%. And then it eventually pumped back higher, where it swept high of the day. As soon as it made that candle, this is, look at it, this daily can, I think should be high volume too, like decent volume, but high of the day sweep as same setup I gave you, the 1500% one. High of the day sweep, candle closed below, and then I was like, okay guys, be ready, we might get shorts, and then boom, instant rejection, the next candle, as soon as you pumped back here in a, that is a clean bearish pocket on 1 minute. And also prices breaking all these lows, confirming that a clear change in structure too. But if you are new, you can leave it for lower lows and lower highs, which it formed in the next couple candles right here. You have put your stops at high of the day. This was my actual stop too after this entry, and my target as usual was pretty high. Low of the day was the external range liquidity high that it formed. Now we had this internal range liquidities at 670, 867, 679.25, and 679.62. So all these levels were my internal range liquidity levels where I had my targets set, but I did not take any profits. I kept on smashing all these internal range liquidity levels one by one, and it smashed that too. So at that point, I was pretty sure if we're taking out all these liquidities, it's definitely 100% gonna go to this bigger liquidity level, which is the day's low, where are most buyers available. But what happened? It broke below it. It never really recovered. No lower highs and lower lows formed, as it formed here to go down. Never really happened here. If it let's say broke above this highs in this case, then I would have stopped out on my position on my shorts, and I would have looked for longs on the pullback, and maybe with a target of high of the day. That never really happened. So prices kept on dumping. I think we got 4 or 5 baggers too on that day. On this day, I think we got another trade. Yeah, this was another internal liquidity range sweep trade too. This was more of a continuation and reversal setup, right? Because higher time frame continuation setup, and we sniped into 1 minute reversal setup. Right, prices already in this massive downtrend on all time frame. So all I was looking for just to short the market again to this next hourly or 4 hour liquidity lows here. So I was only looking for shorts on that day. Price broke above this internal range liquidity high. We are in this nice massive chop, a distribution after a massive dump. So I waited for some sort of internal range liquidity sweep high that it did exactly here, and we got a sweep. As soon as it swept the highs on a pullback, I alerted my shorts with the stops at this high 676.50. Very tight stops with a target of new low of the day and some more. Price rejected it, and then a massive dump followed by and then I think another 200-300% play on our puts, and my original position went up 400-500%, I believe. And then I think there was another trade I took on low of the day break too here. That was same setup, continuation. I think I took 5 layers or 6 layers that day on puts. Low of the day break, liquidity pocket formed on 1 minute. Price pulled back into it. Price stays below the 678.15. Very high chances it's another lower high before it moves down and starts filling the gap. Exactly what it did. As soon as I saw this candles sweeping highs, rejection, pulled back up, and this internal sweep on 1 minute, and candle rejected, closed back down. Very easy for me to tell that they're gonna keep on dumping, and look, oh, massive dump in one candle. I never put sort of 50-70% in one shot. So that's how I played the continuation setup and the reversal setups on SPY last week. Very easy to spot, or very easy to just wait for this setup and then get into a trade. And you see, even if you look at the trade recaps that I posted, I think 15 or 20 trades I posted, every single one of them is the exact same setup. It doesn't matter if it's a downtrend or it's an uptrend. I'm catching. All I have to do is just wait for it to show on the charts and then give you the confirmation and then get into a trade. 1 or 2 trades is definitely good enough for a day, and those trades, in most of these setups that you're gonna get in the first 30 minutes to 60 minutes of the market open. The goal of this is to actually catch the top and the bottom before the market starts its next leg up or down, and you want to enter at absolute top or the absolute bottom. And in the first 30 minutes to 60 minutes is that where it forms either the top of the day or the bottom of the day in the first 30-60 minutes. So you always want to be more active in that in the time and wait for a perfect setup just like this one, and then get into a trade with a very low risk and high reward. High reward is obviously you're trading the reversal setup. Your target is definitely going to be the low of the day or the high of the day, plus some more. So just wait for it and then start taking trades. 1 or 2 trades are definitely good enough. If it's a trend day, then it's a different story. Then you want to capitalize on it. If the market is clearly breaking above or below the high of the day or low of the day and staying above or below this, so that means that trend day is on the way, and then you want to be in the market capitalizing that. You don't want to look for entries midday when the move is already happened. The thing is, if you try to enter midday, put your stops gonna be way high and your reward is gonna be not that much. All right guys, so with that I'm gonna take a leave. Have a good weekend everyone. Enjoy. See you tomorrow in live trading. Have a great day.